Hello students, this is the fifth video on fund flow statement. So far I made 4 videos in which I have explained the concept from the beginning to the solving the long problems with adjustments. Please watch those videos before watching this video. I will provide the link of those videos in the I button as well as in the description box. Whereas when you come to this video here, I will cover the gross block method of depreciation concept. In this, the asset account as well as provision for depreciation accounts we need to prepare, since the information in adjustment will be provided regarding the cost of the asset, depreciation and sale price. How to solve that problem is a very important concept. So let's start the problem. If you see the question, we have provided with the information. The following is the balance sheet of Sahil Limited as on 31st March 2016 and 17. Equity and liabilities, share capital, reserves and surplus we have 16 and 17. Then current liabilities we have. Then total assets we have non-current assets, fixed asset, current assets, inventories, trade receivables, cash and cash equivalents. Under notes to accounts we have reserves and surplus, then fixed assets. In the fixed asset you can find building at cost, depreciation on building is also provided, in the sense the asset value as well as provision for depreciation both we have given, as well as in additional information. If you see, during the year a building which was purchased earlier for 14,000, so far we have charged depreciation on it 1,000, that is depreciation written off we have given, was sold for 1,200. This is very significant. Whenever you find cost, sale price and depreciation of the asset as well as provision for depreciation in notes to accounts or in adjustments, opening and closing both the values, in such a case it is a gross block method of depreciation, and how to solve that problem is very important. And this concept is very significant as far as the exams are concerned. A dividend of 40,000 has been paid during the year. From the above information you are required to prepare statement showing changes in working capital and fund flow statement. So we'll see how to solve this problem. So I have taken the question again for the quick review sake. So as you are already aware, we have to prepare statement showing changes in working capital, then adjusted profit and loss account, and finally statement of sources and application, that is fund flow statement. Now we will come from the beginning. Share capital, last year we had 160 and 220. How much increased? The value is considered as a issue of shares. The amount is 60,000. 160 to 220, in the sense the increase has taken place 60,000, that will be considered as issue of shares. Source. Next, reserves and surplus. We have note in reserves and surplus. So see the note, balance in profit and loss account we had 250 and 5 lakhs. How much profit has been increased? 50,000. But here we take opening balance and closing balance. So in adjusted P&L account we write by balance carried on 5 lakhs. Opening as well as closing balances we have written. Then if you see the preliminary expenses, last year we had 14,000, now it is to 12,000, in the sense 2,000 decrease. So it will be considered as a preliminary expenses written off, will be written in the adjusted P&L account, amounted to rupees 2,000 debit side. We have non-current liabilities. We don't have any non-current liabilities. Then we have current liabilities. And current liabilities, as you are already aware, it will be written in statement showing changes in working capital. Trade payables we had 2,30,000 and 1,80,000. Then decrease in current liabilities, increase in working capital. Then other current liabilities 6,000 and 3,000. Decrease is increase in current asset. Right? In this way you have to write. Then we have assets. Under fixed asset we have building at a cost and depreciation on building. Both we have given along with the adjustment. So here we should prepare two accounts. One is building account, another one is depreciation account, that is provision for depreciation. Better you write down provision for depreciation or accumulated depreciation, either way we can call. So once you prepare the ledger accounts, then building is a asset, shows debit balance to balance brought down. Building value, opening value is 1,40,000 and closing value is 2,18,000 we have written. Once it is done, the next is provision for depreciation is a liability, shows credit balance, by balance brought down 10,000, to balance carried on 11,000. Once you write this, then go to the adjustment. What it says, during the year building cost was how much? 14,000. The cost of the building 14,000 and depreciation charge on that building is 1,000. So after deducting depreciation amount from the cost, we will get value 13,000. This value is called as book value. Which value? Book value. From this, if you deduct sale price, at which price we are selling 1,200, the resultant figure 11,800 is called as loss on sale of building. How it is loss, sir? We had book value of the asset 13,000, which we are selling for only 1,200. In the sense, we are incurring a loss of 11,800. Once you prepare this table, cost of the assets less depreciation, book value minus sale price, we will get loss. If suppose if we would have sold it for 14,000, then 1,000 would have been our profit. Clear? So like this you have to prepare the table. Once you prepare the table, then ledger posting. In building account, what we will write? By cash, at what price we sold off? 1,200, that is cash. And by depreciation, how much depreciation we charged so far? 1,000. By P&L account, how much loss we have incurred? That is 11,800. These three items you have to post it to asset account credit side, that is sale price, that is cash, depreciation and loss on sale. Suppose if it is profit, then we would be writing on building account debit side to P&L account profit. Clear? So like this you have to present the data in the building account credit side. If profit, it should be written alone on the debit side. Once it is done, cash, sale of asset, cash is 1,200 is source, we are getting money. So sale of building is 1,200 source, we are getting money. Depreciation, we have already prepared the depreciation account. In depreciation account, what we will write? To building account 1,000. In building account, it is credited depreciation. In depreciation account, it will be debited as building account. Then loss on sale of asset will be written in adjusted profit and loss account 11,800 on the debit side. If it is done, then close the building account. You are getting balancing figure on the debit side, that is 92,000. It will be called as two cash purchases. In the sense, in the current year we have purchased the building worth rupees 92,000, right? So once we purchase this building, it will be written as application. We are losing money, purchase of building 92,000, right? Once we are done with the building account closing, then proceed with the depreciation account closing. Highest value 12,000, both the side we are writing 12,000 and we are getting balancing figure 2,000 on the credit side. So we write by P&L account depreciation 2,000. This depreciation will be written where? In adjusted P&L account. Depreciation on building, that is 2,000. So this is the precise way. Whenever you find this adjustment, right, you can simply do this problem in this manner. Clear? So once this is done, we have done with the core concept of the problem. Then rest of the things are similar, which you have seen in the earlier videos. So fixed asset is done. Then current asset inventories we have. So opening 3 lakh, closing 350, increase in the asset 50,000. Then trade receivables 1 lakh 62, 2 lakh 54, that is increases 92,000. Then cash and cash equivalents 40 and 80 increases 40,000. Then once it is done, everything is done in the balance sheet. Comes to notes to account is also done. Come to adjustments. And the second adjustment we have provided, dividend paid rupees 40,000 has been paid during the year. So it is an independent adjustment, dividend paid. What should we do? We should be writing on the P&L account, adjusted P&L account debit side, dividend paid 40,000. At the same time, this payment is also an application. So it will be written on the application side, dividend paid 40,000. Clear? So we have done everything in this question. Now we will proceed towards closing of the ledger account. So closing of the statement of changes in working capital. So once you close, current assets and current liabilities summation will be made, and net working capital we are getting 2 lakh 66, that is A minus B, and 5 lakh 1,000, A minus B for 17. So how much increase is taking place in working capital? That is net increase in working capital 2 lakh 35,000. So net increase will be written in the decrease column, whereby we can tally all the columns. This is the easy way. So once you get net increase in the working capital, it will be recorded on the application side of the fund flow statement. Net increase in working capital is 2 lakh 35,000 as application. If it is decrease, that is source. Then close the P&L adjustment account. You are getting the balancing figure on the credit side, that is 3 lakh 5,800. We call it as by FFO. FFO stands for funds from operations. This funds from operation is always source, that is 3,05,800. Funds lost in operation will come on the debit side, it is an application. So as we got funds from operation 3,05,800, then you close this statement of sources and application 3,67,000 and 3,60,000, it is getting tallied. So this is the precise way, it should always get tallied, that is statement showing statement of sources and application, that is fund flow statement. So this is a precise way of doing the problems. I hope I have given you basic crux of the depreciation, that is provision for depreciation, and asset account whenever you have given sale of the asset along with the provision for depreciation. This is a very important concept as far as the exams are concerned. So I have given everything. Please I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative and informative videos. Thank you very much.